Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for April 10, 2020. Today we're taking a look at the NZD USD New Zealand dollar versus the US dollar for today's trade analysis. Important for me to recognize first before I begin the analysis that we have multiple countries taking bank holidays today. If you look at any news calendar, you know that New Zealand and Australia are already taking a bank holiday for Good Friday, the Easter holiday weekend. There's some European countries taking bank holiday, the UK taking a bank holiday, Canada taking a bank holiday today for the Good Friday Easter holiday weekend. So liquidities could be low, which could mean there could be either no movement or very volatile movement. So keep that in mind as you go through your trading today. Sometimes during days like this and its current environment, it may be prudent to minimize your risk strategy or maybe even consider it maximize your risk strategy using more constrictive risk. Or maybe just not trade sometimes during this type of environment with holiday and volatile already market environment. So just keep that in mind as you go through your trading day today. We do have some news coming up 8:30 a.m. Eastern U.S. time for the U.S. CPI data. Don't know if that'll be a big deal for the market or not, but definitely something to keep in mind. Anyway, coming here to the New Zealand dollar, you can see several different trends recognized with trend lines. I think one important one is the black trend line, the long black trend line, the down trend line. Fibonacci, top to bottom, puts the 0.618 Fibonacci retracement level at 0.6070, which happens to be where the current market is. So we're sitting right on top of the 618 fib of the black trend line with our current market price. I thought that was interesting. Just thought I'd point that out. If it stays above there, could mean that we're going to see the New Zealand dollar continue to go higher. 100, 200 period moving averages well above the current market, not even coming into play at the current moment. A break through the 60, 70, 60, 90 level, and I have it highlighted with that red horizontal line. A breakthrough there, likely seeing the market pressure into the mid 61s, and that's the orange zone as our next area. If it can't, of course, the turnaround. This week we've seen an uptrend. Last week was a downtrend, so we've kind of retraced last week's bearish move. One of the things driving the New Zealand dollar higher is the US dollar falling. You can see 1, 2, 3, 4 days, the short black trend line on the right hand side, the USD has been falling, giving some upside pressure to the New Zealand dollar. So when the USD falls, the New Zealand dollar rises. So that's very interesting aspect to today's environment. If the USD continues to go down, then we'll look for the New Zealand dollar to continue to go up. Take the USD chart to the 4-hour time frame. You can see that big long candle from yesterday. That was a bearish move. Currently sitting underneath 99.50, the orange zone down here at the bottom, with limited liquidity and bank holiday today. We may see that just to continue to drift down lower. Any significant bullish volume higher could push right back above and go back up. So just keep that in mind. But today we are under resistance on the 4-hour time frame for the dollar, which means, again, above the 618 on the left-hand side, we may see some upside expectation for the New Zealand dollar. Let's take the New Zealand dollar to the 4-hour time frame. Let's zoom it out like this, and you can see clearly above the last high where the blue and the red trend lines capped out high. We're clearly above that right now. 60.70 is the bottom of that, and again, there's that 618 fib. I guess it's closer to 60.74 is that 618 fib, but you can see the dash blue line there. So for the day today, inside and above that blue zone, I think we potentially look for the continued drift in the direction of the trend, possibly even pushing towards the 61.40 level with any significant volume and momentum. The risk right now is that it turns right back around and goes back down, and therefore it would go back down to the yellow zone 60.40, 60.25 on any intraday reversal. It is interesting to, and we talked about this yesterday in the live trade room, this area here where it kind of bounced around between the yellow and the pink zone. We came down here between the pink and the blue zone. So there's a possibility of making it back down to the yellow zone within the pattern of this trend. If it were to break down through 60.70, we might look for it back at the yellow zone on a dip like what we've seen with these last two circles into support. Doesn't have to do that. Could just break on through 60.90 and continue to go higher for the New Zealand dollar today. Just a peek at our Volume indicator, let's take it down to the 1 hour time frame, clearly bullish. Let's take it down to the minimal time frames. 15-minute right now is a little bit bearish on the 15, but remember, we're coming down towards that 60, 70, 75 level where that 618 fib is, and we're talking that is right into this area here. Right around that area where the market is bottoming out. So if we get any bullish volume from this 60, 70, 75 level, we could be looking for a little bit of a push higher for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.